Hi guys, welcome back to my channel. Today I am going to be going over my trading 212 portfolio. I really wanted to do an update sooner rather than later, only because like my portfolio changed so much. Stuff went crazy and it has been going crazy and it's very up and down, and like the market is really volatile right now. But I thought it'd be a good time to really make an update, and I wanted to wait until the weekend because it's so volatile. Like, the numbers changed constantly and I didn't want to be recording while everything was actively moving. So obviously when the US market is open, the UK market is close to closing and there is no window between those times where I can film. So I was like, I'll just wait till the weekend. But it's a shame because you'll see in a second, I really wanted to kind of show you the worst side of things. Anyways, we'll get into that at some point, but let's just go straight in. So last time I was here, I think my portfolio was about, let's have a check. So that was in January and it was about £300 back then. So I'll start with the S&P 500 because I've had that in there. So I've got £130 and 28 pence invested in the S&P 500, the iShares Core S&P 500 GBX. It's about 4.6 shares. And my return has been £3.83 and 3.03%. As I said in my last video, this was always a placeholder. So I actually sold a bit off. When everything kind of started going crazy, I did say in my in my stock crash video that I wouldn't be selling anything, which was a lie. What I did end up selling was part of my S&P 500, which was a placeholder. I just had the money there, so it wasn't like just losing value. But I decided to sell that and to buy something else. I think I may have bought more Global Clean Energy because it was so down. The next is Global Clean Energy, £287 and 78 pence. Currently is the value of my position in the Global Clean Energy ETF by iShares. I am down £20 and 99 pence and down 6.8%. This is actually good because I was way down. I was so much more down before. You can see in the last month, it has dropped by 17%. At the worst, I think I was like down like, not 18, not 18, I can't remember. It was a lot. And this is one of my heaviest positions, right? So I've got 27.6 shares in the iShares Global Clean Energy ETF. And I've been very heavy on it because it's like one of my favorite ETFs and I've raved about it forever, and I still love the ETF. I bought more during the drops. I bought a couple of times. Down quite a bit on the Global Clean Energy, but I still believe in clean energy and I'm still gonna invest in it for the long term. So that's that. I'm just upset that I didn't put more in when it was in such a dip. I did open more new positions and that's kind of why I didn't add as much into it, and I wish I had, to be honest, because I know it's going to recover and it's going to do really well, like for the long run. And so yeah, I'm a bit upset I didn't take full advantage of that, but there are other things that I felt were probably more important, which I will get to. So let's have a look at Tesla. Last time I was here, I don't know if I had a position in Tesla, but I do have it here now. The value of my Tesla position is £61 and 8 pence. I'm up £1. 1.8%. Crazy. Tesla was like, everyone on Tesla was like 100% gains. Like, it was bad. Tesla was really, they were soaring, and now they've actually recovered quite a bit over the last month. I think they're gonna be fine, honestly speaking, in the long run. And I am investing for the long run, so that's why I'm like, whatever happens, happens. Let's see, did I buy more? I did, actually. I bought £60 in February, so you wouldn't have seen that in my last update. I have fortified, is that a word that I can use? My position, fortified my position in Tesla. Yes, I bought, I think, a bit more on free trade. I'll make a free trade update at some point, so do keep an eye out for that. Next, let's look at Coke, because that was a position that was open before. I have £126 and 48 pence in Coca-Cola right now. I did talk a bit about my issues with it in my free trade update. Oh no, so this is new. You guys haven't seen this. I bought a bunch in February and then a little bit in March. So you wouldn't have seen this. It's actually a new position on here. It's the same thing with Tesla. The reason is because free trade stopped accepting any buy orders to the US during the GameStop stuff, and so I decided to use Trading 212, which is why I have positions in Tesla and Coca-Cola, which I already have in my free trade account. which made no sense for me, but I had no choice. So yeah, bought a bunch. If you want to hear more about my thoughts on having Coca-Cola and trying to be like a bit more of a sustainable investor, feel free to go and check out my video on free trade. And I go into that very deeply and talk about my struggle there. Coke is like, it's plateauing. Honestly, I don't think it's gonna see a crazy amount of growth over the next while. Honestly, I don't. They haven't really recovered since the pandemic. I think when everything goes super back to normal, there will be a little bit of a bump, but I don't really think there's gonna be much there. But I'm just there for the dividends. They're a dividend aristocrat. I'm there for the dividends. Of course, I'm there for like some growth, and I know there will be some growth with Coke. I think it's going to be a company that's going to be around for hundreds of years to come. And they own so much, so I think they are going to grow. I don't think they're going to be like a Tesla. Do you know what I mean? Like, they've done most of their growing, unless something crazy majorly innovative happens. I think when they start going really clean and they make some actual plans with like their sustainability, I think they will probably skyrocket. Until then, they're just gonna be going steady as they have been. On to the next one. So I have 2 new positions and I'm really excited about them, and I'm gonna share them with you. The first position I shall share with you is Carnival, because I bought it first. So I opened this position February 1st. It's currently worth £51.02. And I bought 3 shares. It's up £15.98, which is 45.61%, which is amazing. I essentially bought Carnival at its lowest point. It was really struggling, like Carnival's doing terribly. However, I really wanted to kind of build out as a traveler. This was an idea I got from Helen over at Her Penny Potential. She does amazing content. Go check her out if you don't already watch her videos. She's great. But she had like, I saw she had a travel pie, and I was like, this is genius. And in my head, I was like, any investing I do outside of Vanguard, which is where my main portfolio is and where I put most of that's my like serious investing, you know, for the long term, for retirement, for my future, goes in Vanguard. This is like my fun portfolios, free trade and trading 212. This is I'm investing in riskier positions, riskier stocks, and sometimes individual stocks, sometimes ETFs. So it's just riskier in general. When I watched her video a while back, she had a travel pie that she created on trading 212. I was like, that's a great idea. Creating pies around like specific industries or specific things that you want to focus on with investing. And I was like, I am a very hardcore traveler. I am a long-term traveler and I love travel. And I was like, it doesn't make sense that I'm not even investing directly in travel, especially while everything is going on and travel is struggling. But travel will make a comeback, and as you can see by Carnival, it has. So when I decided that I wanted to invest in Carnival, I was looking at like cruises, airlines, and other things to invest in, but cruises was still doing really badly, and I was like, do you know what, this is the perfect time to invest. So I was looking at the biggest lines around, and Carnival own quite a few obviously cruise lines, and they had just expanded their new port, and I was like, this is the perfect time to invest in Carnival. So I was just like, I'm just gonna buy 3 shares. And I wish I'd bought 10 because it's doing really well. So Carnival has been one of my big winners. So my final position and a new one that I opened is in IAG, which is the International Airlines Group. This one was an interesting one. I wish I'd done this earlier. I was kind of battling because I really wanted to invest in something UK based, especially while we were starting to come out of lockdown, and I knew that UK stocks, especially anything travel related or retail related, was going to start to do well. I wanted to invest in Delta, but Delta's already kind of seen its boost back and it looks like it's doing well. So I was like, maybe not Delta. I don't really even fly Delta that much, and I'm so heavy in the US. Do I need any more? Do I need more US exposure? Probably not. So I was looking at locally, and if you don't know, IAG own British Airways, Iberia, a bunch of like airlines, and Aer Lingus, and they were really doing badly. And I was like, you know what, when summer comes around and everyone gets back on flying, it's gonna do well. And in the long run, like, British Airways ain't going anywhere. If the UK does not disappear, British Airways is gonna be around. So it seemed like a pretty sound investment for the very long run. I have £42.34 is the value. I bought 20 shares and I'm down £1.38, which is minus 3.1%. 0.16%. They're kind of coming back to a base where it looks like they're going to start to recover, but they've been doing really badly for like since the pandemic, and they never did recover, and I feel like they're gonna recover. Okay, so let's have a look at the whole roundup of my portfolio. My portfolio is worth £698.99. Do you know how annoying that do you know how annoying it is that I'm like, how much is that? £1.01. Is that right? Am I daydreaming? £1.01 away from 700. So this is gonna say a £600 portfolio. That's literally what is gonna be my title. Tomorrow it's probably gonna be a £700 portfolio. But I was not about to wait. Yeah, I didn't care. I was just like, I just wanna make this video on a weekend so that the numbers don't fluctuate, and when I show you the video, the numbers actually match what is happening. So, tip if you're ever trying to do that. But yeah, I invested, this is funny, I invested £698.51. And I returned, well, my returns are 48 pence and 0.07%. How crazy is that? It's actually really bad. I was in the red for about the last 5 days or something. For the last week, I'd say I've been in the red. And I really wanted to show you guys while I was in the red, but I didn't know it was gonna change so soon. Let's look at my greens: Carnival, Coca-Cola, S&P 500, Tesla. Those are all in the green now and still in the green. IAG's in the red, and Global Clean Energy's still steadily in the red. Oh my gosh, I need to buy more while it's in the red, you know. I really should have doubled down on my position, but I was opening new positions and investing in my stocks and shares ISA because the tax year is coming. Priorities. You really do have to pick your battles, and you really have to decide what is most important for you when it comes to investing. This is by no way, shape or form investing advice. It's just what I've been doing personally with my own account. This is for entertainment purposes only. I hope you guys are doing well. Until next time.